Hello everyone, Maurice and welcome to Tanks Invest, where we talk about investing, finance, and professional development. For today's video, at 10 purposes only. The investment I'm going to talk about today would be a new one that I've never covered before. It's called Polkadot, or ticker TOT. So with respect to Polkadot or DOT, I've been getting some questions around like what are the levels that we should be buying at, right? How do I feel about this cryptocurrency as a whole, with respect to utilizations, the adoptions going forward? I'm not a subject matter expertise with respect to cryptocurrency as a whole, nor am I specifically for Polkadot or DOT. But I am able to, detect and identify some of the key resistance levels that you guys are looking to buy in if you are truly a believer into the utilizations and the long-term adoptions for this going forward, knowing the fact that ultimately all cryptocurrency is a commodity that that are interchangeable, and there are a lot of comparable ones in the exchange, right? Comparable to like a Dogecoin, to like Ethereum, to obviously a Bitcoin. So I'm gonna go through the technical analysis to see what the resistance level that we have seen so far in a psychological perspective, what the levels that we can watch out for in case you want dollar cost average or building a position for the first time, and the foreshadowing volatility that we'll be seeing for this going forward as well. So stay tuned, stick around, and let's make some technical analysis for Polkadot, ticker DOT. Again, this is a relatively newer cryptocurrencies or crypto technologies, if you may. And just on a high level snapshot, you can see how volatile it is already. Just seeing the MACD, how drastically shifts it has been, sustaining historically. And you could see just ever since on a historical level, we were trading around like the $3 or $4.50, sometimes around like last year Christmas time. And ever since that, we got pumped up. And I know that this is mainly driven by human emotions. You could see how drastically it's been forming an outlier based on just simple and demand dynamics on just how stretched the curve has been for MACD, right? This doesn't naturally occur, right? And I think this is mainly driven by a lot of like possibly Wall Street bet influence or like YouTuber influence, or just media affectation that's pumping this, as the next big cryptocurrencies comparable to like the Dogecoin effects that we've had, right? People just like buying it because like people are using the word of mouth effect, and obviously with respect to like the just more people like hyping it up, you have this like kind of FOMO effects also causes this like pump and dump type of a dynamics in the equation, right? And that's exactly what happened. You saw that we were selling off slightly from the not like $10 level, which is like most of the time like a psychological resistance level that when we hit about like $10, we sell off a little bit. Then ever since then, I think people were FOMOing, and also there's another catalyst with respect to like a really positive or seemingly positive media affectation that pumped up, and people were bought, like a bunch of people bought in because like at those levels are relatively cheap, right? Buying it like $7, I don't know, buy like $1,000 worth of DOT and hope that will go into $50. That's like a huge gains from there, right? And I think a lot of people have those type of mentality that subsequently rolled up. And once we got there, we sold off a little bit, and then we got all the way up to like the $18 level, right? And I think we kind of tested this level because again, right, hitting that $20 wall, right? That's like another secondary psychological resistance level that we formed, and this ever since then we consolidated for about how long is the duration from February 3rd. So basically like half a month in durations of the consolidation. And then we have a little bit more positive media affectations. And then with respect to the Coinbase IPO, and with respect to like just the Dogecoin saga, and also the SNL debut that Elon Musk has given us, that we drove all the way to the top, right? You could see how much we have basically drove up. From basically the first like the true consolidation level that we've had at like the $16 level, we broke through that resistance above the 20, and then we up and away. We had like some more consolidation, and you could see we had this one-time dump. I don't know what happened here. This might be a technical glitch here. No, yeah, this is not a technical glitch. You could see the MACD correlates with this big dump. So one big investor, a big whale, dumped a huge chunk of it, and you could see how dragged up the MACD was, right? So this is like a classic pump and dump scheme. You see someone dumped it like huge amount of it, trading from like the 37.56 all the way down to the consolidation level that we have above at the $12.48 level, right? And you immediately reverse back because of just the elasticity affectation, right? Whatever goes down really, really fast comes up really, really fast. Whatever goes up really, really fast comes down really fast. And this is like a glimpse of like a very sudden shift, right? Someone dumped it immediately, and a bunch of people bought up immediately. Mainly driven by public investors, but also with respect to a lot of the algo trade, which I believe some crypto fund has also placed a buy order at, which subsequently drove up the level that we've had. And then ever since then, we kind of consolidated again, right, back up to these level around like the $30. The average level is about like the $33-50 level, and then as we approach further into like the SNL debut, around like the April 21st time frame, you see that we kind of have this like small rally, but ever since that show debuted, we dumped it basically back down, and you basically retest this level one more time around like the $28.29. But this is below the psychological resistance level of the $30, right? Which subsequently drove more of a sell-off ever since, right? And you could see that the balloon popped on May 15 alongside with basically the rest of the cryptocurrencies market, right? You initially tested this like consolidation level around like the 36.47 level, and then ever since then, because of lack of formations of consolidations in the past, right, you could see that we have a bunch of fluff here. These are not really this is like a kind of a consolidation level, but anything above that, you don't really see anything like substantively consolidated, right? And also on top of that, of the fact that outlier that we've formed here, this big dump that we've had, kind of destroys the whole logics in the supply and demand dynamics, right? So basically, this line is basically matching with this big pump and dump, because this was basically a gap that would form historically in a psychological perspective, that we basically retested this level at the bottom of the $13.39 level, correlating with the big dip that we've had here before, right? That we have formed back in January 19th. We also formed on this mega dump. I think this is like one of the biggest dump I've ever seen before on February 22nd. So we're basically correlating with that, right? And ever since then, we bounced back up. And you could see that at that point on May 23rd, because of the fact that we were so under the water on the MACD perspective, that it just required us to like bounce back immediately, right? Because of that was the level that we were at the restricted area, if you may, right? That whatever goes down extremely fast. It have that like even larger elastic rebound that subsequently drove up this dead cat bounce, right? And you could see how fast and how powerful that bounce was, right? From the $13.30 level to above the psychological resistance level. We basically broke through like one wall, two walls, three walls, and we were basically hovering at these levels here, right? So we broke through like four resistance levels that we broke through to get to the level of 2626, which is correlating with this level that we've formed several times, right? You can see that it kind of translates. We've tested this once, twice. This doesn't count. 3 times, 4 times, 5 times. So which is the reason why we got to this level, right? But again, you could see that the substantiveness of these consolidation level are not really consolidation level. They are just resistance level that they were hitting the wall. And again, right, whenever you hit the wall, it's gonna take extra effort, extra momentum for you to push above the wall, right? And that's exactly what happened, right? The ping pong ball didn't get above the wall or crack through the wall and subsequently sold off from there, right? And you can see that right now we kind of hovering around this level right here at the $19.83 level at the moment. And with respect to the psychological resistance level, I would say this level is fairly consolidated with a lot of corresponding consolidation we've seen in the past. You can see that we've tested this several times, just like about a week and a half, just a week ago, 2 weeks ago. And we have also tested this a couple of times here on May 25th. So like about 2 weeks ago, we also tested this a bunch of times here. And then historically speaking, this doesn't count. This is just like a flash crash, right? We also tested this a bunch of times before this whole rally up, right? So I think right now, based on how the chart is set up right now, you could see that the MACD is basically crossing downward right now. So I see more bearish pressure at the moment. And you see that with respect to the gap that we have here, the drop down is relatively wide, right? related to the next level of resistance that will be going down to from 1953 will be going down to the 1678 as like a formal substantive consolidation level, right? We might rebound a little bit close to around the 1850 level, but you can tell that the level of substantiveness is so shallow, right? You don't see anything but just this one time, right? So so I wouldn't recommend like buying it at this moment right now because of the fact that we have a very high likelihood, I would say 50-50 of like going back to the $1850 level, right? And then the likelihood of like going further down, knowing the fact that we've seen how volatile this is already, that going back and retesting the level of right here, the $12.30 would be more likely, right? This is a flash crash, so that doesn't count because we have like this mega gap that we need to fill. So I think the fair level to buy right now, I would stay away at this current moment right now. I would wait until we hit that 1824 or $1850 level, right? As the first test of resistance, maybe buy like 5% of your cash balance. And then if we get down even more to the next level of resistance, which is the 16, let me tell you this right now, 16, like the $16 level, right? So that's a pretty steep drop, right? From the 1820 all the way to the $16 level, right? And then once we get there, we have a pretty steep drop from there if we break that level, right? All the way back down to the below $10, like the $8.98 level, right? So definitely highly risky based on what we see in front of us. I think the levels are you're basically trading based on the human emotions right now, and it's hard for me, personally, to invest my money into something that has a lack of formalized utilization or adoptions, across the world, across the in the global and the business perspective. I think this is just basically like a pump and dump machine that we have in front of us, and I think the spread is relatively wide. That you could lose a lot of money from here if you don't know or if you're not calculated with respect to your risk mitigations, right? So, but again, those are the levels that I would suggest buying at, and hopefully that's helpful. But this is a pretty risky asset class, and in addition to that, this is a very risky asset in this asset class as well. So with respect to Polkadot's ticker DTO, just to break down the numbers that we talked about today, I know it's a little bit convoluted in the chart because it's just a lot of human emotions in play. The chart is basically out of whack. It's like basically human emotions going up and down, pump and dump all over the place, right? So it's definitely a very, very volatile asset class, and obviously very volatile commodity as well for you to trade. So definitely, don't hold your breath when you're investing in this. But with respect to the resistance level that we have identified throughout the chart, in the supply and demand dynamics, looking at the MACD and RSI and the resistance levels, the 1975 will be the first level for you to buy in. But the drop from there, knowing the fact that we have only tested 3 times in the psychological resistance level historically, that the likelihood of like breaking down to like the $16 would be relatively fair. I think I give that like a 60-40 ratio in terms of like getting down to the $16, which is a much more consolidated level of resistance, which we have tested about like 12 times historically. But if we break that even more, that's a pretty steep fall from there. $7 steep fall all the way to like the $8.99 level, which we have tested way before, around like the Christmas time last year, ahead of the pump and ahead of the whole euphoria that we've experienced so far, right? So the spread is really, really wide. But if you know what you're doing, and if you are calculated and you know how to risk mitigate, and ultimately you understand the macro adoptions for this going forward, these are the levels you look out for, right? But again, right, this is not for the faint of hearts. This is pretty volatile stuff, to be honest. So I personally will stay away from Polkadots, right? Because I'm not subject matter in Polkadot, and secondly, why would you invest into something that is not as good as like Ethereum or Bitcoin, which is obviously globally adopted and adopted by corporations already, which has a lot more gravitas and substantiveness, in comparisons to Polkadot, right? I think if you're a short-term trader and you know exactly what you're doing and you know the resistance levels and you can read the chart much better than I can do, yeah, definitely. I would suggest that you go ahead and do it because I think the rewards can be massive, but just so that it correlates to the downsides that you can also equally would have. All right, so that's it for today with respect to my technical analysis on Polkadot, ticker DOT. Again, it's a very volatile asset and definitely a very pump and dump type of play based on how we are seeing and how the chart is characterized so far. So definitely, invest, with great caution. Hopefully you guys find this helpful in terms of identify the clarity and also get more transparencies around the resistance levels to help formulate your executions on your trades going forward. And please kind of hit the like button, subscribe, and also the bell notification. And watch out for the next video coming up. Take care.